Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Equity Residential, a company that owns a ton of apartments. We're gonna decode what this report tells us about where they're heading and if it's a good direction for them and their investors. You might think a company that owns apartments wouldn't be that exciting, but trust me, we're gonna see some interesting stuff. So this is an 8K filing, which basically means it's a current report about some major happenings. This one is dated February 25, 2025, meaning that's when the event they're reporting actually occurred. It's like a snapshot in time, telling us what's new and important with Equity Residential. Equity Residential, or EQR as they're known on the stock market, is a big player in the apartment world. They own and operate apartment buildings in many major cities. So how they're doing is a really good indicator of the housing market as a whole. This part is mostly just standard company information like their address and phone number, which really isn't very useful for our analysis. The important part is what they do with their business and how well they do it. This section is basically some legal boilerplate, checking boxes to say they aren't trying to pull a fast one by filing this report for other obligations. It means they're not using this one report to cover other legal things, it's just about what is written within. This tells us the type of stock they have registered, common shares. That's the basic kind of stock that most people buy and sell. It also tells us that it's trading on the New York Stock Exchange under the ticker symbol EQR. So if you want to buy or sell Equity Residential stock, that's what you'd look for. Okay, this is where it gets interesting. Item 7.01 refers to something called Regulation FD disclosure. In plain English, it's a rule that says companies need to share important information with everyone at the same time, not just a select few. Basically, they can't whisper secrets to some investors and leave everyone else in the dark. What's the news here? Equity Residential is holding an investor day. Think of it as a big presentation where the company's management team tells investors how the company is doing, what their plans are, and answers any questions. It's a chance for the company to put its best foot forward and convince investors that they're on the right track. The report mentions Exhibit 99.1, which is the actual press release about this investor day. It's like the supporting document that gives all the details. Basically, you can go to the exhibit and see the full story. This part is a disclaimer saying that the information in this report is just being furnished and not filed. Filed means that the company is legally responsible for every single word being completely accurate. Furnished is a little less strict. It means they're sharing the information, but with slightly less legal risk if something turns out to be not quite right. It doesn't mean they are lying, but the bar is a little lower. Finally, we get to item 9.01, which is about the financial statements and exhibits that are included with the report. It's like the appendix of a book where you find all the supporting information. Here, they're listing the exhibits, and the most important one seems to be that press release we talked about earlier. Now, without the actual press release, we don't have a lot to look at, but the good news is that Equity Residential is communicating and willing to talk to their investors. However, because we don't have access to any financial results or future plans, it's difficult to make any call as to the company's direction from this report alone. Now, let's step back and look at the bigger picture of Equity Residential and the apartment market. Equity Residential operates in major cities, so its performance is tied to the economies of those cities. If people are moving to those cities and jobs are being created, then Equity Residential will tend to do well. On the other hand, if there's an economic downturn or people are moving out of those cities, then Equity Residential will struggle. One thing to watch out for is interest rates. Real estate companies often borrow money to buy and develop properties. If interest rates go up, it becomes more expensive for Equity Residential to borrow money, which can hurt their profits. Another thing is the supply of new apartments. If there are too many new apartments being built, it can drive down rents and make it harder for Equity Residential to keep its buildings full. So, what's my take on Equity Residential? Well, based on just this report, it's hard to give a complete assessment because it's more or less saying we're holding an investor day. In general, holding an investor day is a good sign, as it shows they are willing to talk to investors. But at the end of the day, we don't know what to expect at the investor day or what conclusions to draw until it happens. If I were looking at Equity Residential as an investment, I'd want to dig deeper. I'd want to see their financial statements, understand their strategy, and get a sense of the risks and opportunities they face. From there, I could decide if it's a company I want to invest in. Thanks for watching Corporate Decoder. If you found this video helpful, please give it a thumbs up and subscribe to my channel for more deep dives into the world of corporate filings. And don't forget to leave a comment below with your thoughts on equity residential and the apartment market. See you next time.